All right, here we go. One more time. Can everybody hear me? All right, here we go. I literally went through an entire forecast not knowing that my stream was down. So, sorry about that, everyone. Anyway, let's get it going one more time. All right, so okay, here we go. So, happy Monday. Sorry about the hiccup there, but we're back on it. So some Monday morning gremlins to start the day. It is a holiday here in the U.S., Columbus Day and Indigenous Peoples Day. Banks and bond markets are closed, but the stock market is open. So here we are. We'll be prepared for a likely drop in market participation today, as I do expect many people are still out enjoying the 3-day weekend. Thanks for sticking around to join me today, and always thanks for choosing to spend your time with us. Our goal here is always to apply accurate context, sound risk management to the markets. Remember to hit that lucky like button. Feel free to share your comments and feedback in the chat. We do appreciate all forms of feedback, and if you haven't already, go ahead and subscribe to the YouTube channel so you get those excellent updates every time we go live. For those of you who haven't joined me before for a market forecast or recap, I do sort of an abbreviated version of what Hogue does. We'll run through the economic calendar, touch on a few key points, look at some charts for the ES and NQ, gold and crude oil. I keep my charts pretty simple. You'll see the weekly kickoff levels, a few moving averages, volume bars, momentum oscillator, volume profile on the 30-minute charts. That's really about it. All right, I'm going to speed this up. Let's get right into the economic calendar. So the main focus this week will be on inflation. We have PPI on Wednesday, CPI on Thursday, as well as the minutes from the last Fed meeting being released at 1 o'clock Central Time Wednesday. Outside of that, we've got about Fed speakers scheduled throughout the week, big bank earnings from Citigroup, JP Morgan Chase, and Morgan Stanley. And today, pretty light calendar. Today we have Charles Evans speaking. That started at 8 o'clock Central Time. He's probably still going right now. And the Investor Movement Index at 11:30 Central Time. Let me just check in and make sure everybody's still here. We're all indigenous on the earth. Thanks, Trading Research. Tachyon, Charles, Jordy, Bron, Huggle Matters, Jay Gilmo, Caprice, Kevin Guy, Joel, Trading Research. Thanks for sticking around, everybody. Sorry about the hiccup. Sarah Hall, ZK, I hope you got your weekly kickoff email this week. I hope that got straightened out. If you did not, just let me know, and I'll look into that one more time for you. I'm getting messages. Okay, people are telling me I'm back on. Everybody's letting me know that I'm back up and running. Okay, so moving on, I'm going to pull up some charts for you. Oh, first, overnight, Asia markets. Stocks in Asia closed lower. Shanghai Composite down 1.66%, Nikkei down 0.71%, and the Hang Seng Index down 2.95%. Pretty big drop. In Europe, markets are trading a little mixed. Last time I checked, it was about a half hour ago. The DAX was up 0.73%, CAC was down 0.18%, and the FTSE was down 0.27%. In the U.S., stocks are poised to open just a little bit higher right now. We were a little bit lower about an hour ago. Now we're a little bit higher. My last check, VIX was up 2.4% to 32.93, and the yield on the 10-year Treasury note is holding steady at 3.88%. Take one last look in the chat before we move over to some charts. JD looks warm today. I was a minor panic. I thought we were streaming, JD, and then I guess we weren't. Like I said, I ran through an entire forecast thinking that everybody was live with me, and oh well. Well, let's dig into some charts real quick. Here we go. Let's start with the daily on the S&P. So we had this hollow rally on light volume to start the week last week. Then prices stalled out at around this 38.20 level. testing this 20-day moving average, but never really pushing through it. We finished the week with 3 consecutive down days, 3 consecutive lower closes. Now we're right back in this sort of area of congestion, or area of balance from late September, and hovering back around these June lows once again. All around, volume wasn't that impressive last week. I wasn't very impressed with the volume last week, but we do see it steadily rising going into the end of the week here, slowly. After making the slower high here, and if you just drew a simple trend line, you can see that the downside structure is still intact here. So after Friday's break right here, ES settled the week at 36.53 quarter, down 103.5 points. December contract traded 2.2 million contracts in all, and picked up about 17,000 in open interest. Here's a look at our 4-hour chart. Here we get a closer look at this previous area of balance. Prices traded in this, I think it was about 120 handle or so range for over a week before this rip on Monday and Tuesday. Now we're right back in the middle of it. We came down to the lower end of this range, sort of rallying just a little bit this morning. There's been a lot of jockeying for position going on here. I'd imagine there's quite a few shorter-term stops building up below our weekly kickoff low here at 35.40. Here is our 30-minute. So here's our move from Friday. This is the break after the release of the September jobs number. We open regular trading hours with a gap, which is this blue box right here. This is the gap from Thursday into Friday. Then continue to trade lower for the rest of the session, creating sort of a double distribution trend day here. Spent some additional time in the lower end of this range, and closed out the day right near the lows. Overnight inventory was pretty balanced until just a little while ago. We see some buying coming in, and prices look poised to open inside of range, inside of value, and above Friday's point of control. Overall, this market was lacking some confidence early last week, but it looks to be finding its direction again. Failure to break above that 38.20 level tells me that downside structure is still intact, and opening side value from Friday and the fact that it's a holiday, my plan for today will be to just stay patient, wait for better trade locations to get in on this market today. It's going to be thin. Let's take a look at crude oil. Here we are. So crude has been on an absolute tear the last 2 weeks. Starting back here on September 26th, prices have rallied $17 in 10, 11 trading days, something like that. We're now trading comfortably above the 50-day moving average, which is this red line here, simple moving average. The 10-day moving average has crossed above the 20-day, looks ready to cross above the 50 too. Volume is strong, momentum's pointing to continue higher prices right now. And during Friday's rally, the November contract traded 430,000 contracts, and it lost close to 20,000 in open interest, which I'm going to say is pretty much due to the roll next week. Also, there could have been some profit taking going into the long weekend as well. But I will say a majority of that is probably rolling into the December contract right now. Prices did settle the week at $92.64, up $4.19 for the day on Friday. Here's our 4-hour chart. Here's a close-up of this 2-week rally. Pretty textbook if you ask me. Higher highs, higher lows, with some solid volume the whole way up. We did have a little selling coming in this morning. Kind of balanced out right now. But let's take a look at the 30-minute and see what that's telling us. So, now I'm not an expert like Hogue in the profiles, but this looks like a P profile shape to me, which in turn, according to the book, represents short covering. So with that in mind, we likely had some weak shorts trapped here, pre-market, overnight, Thursday going into Friday, kind of forcing this rip to open regular trading hours, ending the day in balance here. We may get some choppiness in this market today too, simply due to the lack of participation. Right now we're inside value, just below Friday's point of control. So my game plan's pretty much the same in all these markets. Just be patient, look for better trade location. It's kind of choppy right now. Let's move over to the NQ. Same scenario as the ES here. let's go back to our daily. Here we are. We had a hollow rally on light volume to start the week last week. Prices stalled at this 11,700 area, testing the 20-day moving average, but never breaking through it. Then finished the week with a nice break. Now we're back in this sort of area of balance or congestion from late September and hovering around the June lows once again. Volume was stronger on the move down late last week. We can see that the downside structure is still intact with just a basic. Just imagine a trend line there. In all, the NQ settled the week at 11,101.5, down 440 points. The December contract traded 760,000 contracts and gained 8,200 in open interest on Friday. Let's take a peek at the 4-hour. Again, here's a closer look at this previous area of balance. Prices were range-bound for a little over a week here before this rip on Monday and Tuesday. Now we're right back to this balance area, or right around the lower end of this balance area. Similarly, yes, with all the position jockeying going down here, I'd imagine there's some stops building up below our weekly kickoff low at 10,650 here. On our 30-minute, here is our move from Friday. This is the break after the release of the September jobs number. Open regular trading hours with a gap. I didn't mark that. I marked the ES with a blue box. I did not mark this one. But then continue to trade lower for the rest of the session, creating this sort of double distribution down day. Overnight inventory, pretty balanced until just a little while ago. We see some buying coming in. We're above Friday's point of control, but we are going to open inside value, inside range from Friday. Overall, this may sound a little redundant, but this market also was lacking some confidence early last week, but looks to be finding its direction too. Failure to make that move above the 20-day moving average tells me that bears are still in control for now, and downside structure is still intact. We'll likely open inside value from Friday, like I said, so again, wait for those setups to come to you, and hold tight for better trade locations. Here's our gold. There's a 30-minute. Let me go over to the daily. So, last week, prices made a run at this 50-day moving average, which is the red line here again, and failed. We also failed to take out this high from back on September 12th, resulting in 3 consecutive lower closes on decreasing volume, actually. Seeing a bit of follow-through on that weakness happening this morning. Our weekly kickoff high kind of matches up nicely, coincides with the 50-day moving average. So I think that could be our line in the sand for much of the week, unless this weakness just continues. These two shorter-term moving averages are converging on each other, but this momentum oscillator down here is signaling a bit of weakness in the market right now. On our 4-hour, here's a closer look at the test. Here we go. Let me just condense this real quick. What happened? Did I just lose it? There it is. Closer look at the test of the September 12 highs back here. Just couldn't quite make it up there. Then we have this little dip in volume while prices were balancing out up here last week. Then a pop in volume during Friday's break right here. We're now approaching this previous area of congestion, 1690 to 1660 area, which could turn into our next inflection point. We're right there right now, trading into that area of balance. Here's our 30-minute. So here's the break after the jobs number. I think my I was playing around with this a few minutes ago. I think my profiles are off a bar or two. I'll get right on that. Anyway, a break on the number last Friday. Then a nice little pullback into regular trading hours. It wasn't very sustainable pullback, though. Prices closed out near the lows of the session. Now, look at the selling overnight. There is some weakness right now. We've got a decent gap to open regular trading hours. Buyers are just getting eaten up right now. If you're looking to fade this move today, keep in mind that it is a holiday. I'll just keep repeating that today is a holiday, and it will likely be thin today. Market participation is expected to be low, so keep that in mind. All right, with that, I'm going to jump over to the chat. Anything coming in? Thanks for the heads up, everybody. Yeah, I started getting messages that I was on camera. I had the stream up and I thought it was up and running the whole time. So my apologies. Monday Gremlins. Let me switch back over here. So with that, just a quick announcement for later. Group coaching is on for today. Hogan's not here, but myself and our social media and community manager, Nick Dolby, are going to jump in the group coaching room and take a shot at answering some of your questions. So feel free to drop an email. Drop me an email. I'll throw my email in the chat here again. If you have any questions for group coaching, just shoot me an email, and we'll try and squeeze in as many as we can. I'll also be back for the market recap this afternoon. The schedule for the rest of the week is kind of up in the air. It's tentative, but we will definitely keep you posted on any other changes coming up this week. With that, equities just opened, so I'm going to let everybody get to it. Have a great trading day, everyone, and we'll see you either in group coaching or this afternoon on the market recap. Thanks again for hanging in there with me, everyone. Appreciate it. Have a great day.